Ever found yourself glued to your phone, checking the stock prices over and over? The thrill of a rising stock, the gut punch of a crash. It feels like a roller coaster, doesn't it? When I first started investing, I told myself that I'd be in it for the long run, set my money aside and let it grow. But that's not what happened. Instead, I found myself checking my portfolio every few minutes, feeling a rush when the numbers went up and a pit in my stomach when they dropped. It wasn't just about money anymore. It was the constant dopamine hit and the what if scenarios playing in my head. Well, if you've been there, you're not alone. Welcome to the podcast. I'm your host, Professor Sanya, and today we have someone who can actually help us understand what's happening inside our brains when we trade. Joining us is Dr. Shivangi Kaushik, faculty at SRCC, one of India's most prestigious colleges, and a specialist in neurofinance. Pleasure to have you, ma'am, over here.
Thank you so much.
Before we delve into dopamine and trading addiction, let's start with the basics. Neurofinance is a relatively new topic. So could you explain us what it is in simple terms?
Well, thank you for having me here again. It's a great privilege to be talking about neurofinance since it's a very new field and not a lot has been talked or written about it, so
Absolutely.
We're still in the stages of infancy. Coming to what it really is. So neurofinance is a remarkable field, so to say, that combines the research findings from the disciplines of clinical psychology, neurology with finance.
Okay.
Because say in traditional theories of economics and finance, we generally had this assumption, if you remember, because when we used to study theories such as efficient market hypothesis or capital asset pricing models, so there used to be an assumption that the investor is always rational.
Yes.
Now, if you read neurology or psychology, they would say that the investor cannot always be rational because at the end of the day, we're all human beings, right? Homo sapiens. So we are susceptible to biases. We're susceptible to falling prey to emotions, taking our decisions according to the emotions or the cognitive biases or our experiences. So that is what neurofinance studies, that real time, what is happening in our brains, physiologically and biologically, that is making us take those particular decisions. That is neurofinance.
That was a beautiful explanation by you, ma'am. So, basically we can say that our emotions hijack our money decisions. And I feel that, financial decision making is a lot more than just numbers and logic. And I guess it's a type of reminder that investing isn't just a rational process. Rather, it's a deeply human one.
Yes, that's true. So investing, no process that a human being is doing can be 100% rational. It will be human. What is it like to be human? It is like to make mistakes, right? Learn from your mistakes and then you make yourself a better person. The same thing is with investing also.
Okay.
So we have to understand that what is happening in the brains when we're taking an investment decision. Say, for example, human brain is approximately 1.5 to 2 kilograms of the body weight. And it takes up 20% of the body energy. So there's incredibly a huge amount of work that this organ is doing.
Absolutely.
So what it is, so it's very complex, but I'm going to explain it in simple terms, what is relevant over here.
Okay.
So the brain primarily can be divided into two parts, the logical brain and the emotional brain.
Okay.
All right. So the logical brain is into complex cognitive thinking, like taking investment decisions, mathematical calculations, or, logical reasoning. So it's just behind our forehead. It's called the prefrontal cortex. And it's highly evolved, very specialized, very new. And then you have emotional brain, which is also called the limbic brain.
Okay.
So limbic brain comes from a Latin word, which means something that is broad, but not because of the size. It's exactly a U-shaped brain right in the, center of your brain.
Okay.
And it's really small. But what does this limbic brain do? Every emotion that we're feeling in the body, whether it is Happiness, sadness, distress, fear, anxiety, frustration, everything is coming from the brain.
Oh my God.
And somehow Bollywood or Hollywood or films have romanticized this idea that all the emotions are coming from the heart. It's not true.
Yes.
Because technically the heart rate variability,
Okay.
as we call it, it's a consequence of what your brain is making you feel. That is why we say our heart is beating faster.
Yes.
So it's an interaction of the limbic brain consisting of a lot of organs, further subdivisions like amygdala, like thalamus, hypothalamus, parahippocampal gyri, anterior cingulate, and so on. It's a combination of all these organs, the limbic brain, and its interaction with the prefrontal cortex. In simple words, how does the limbic brain, emotional brain, how is it interacting with the logical brain? So in dono ka interaction is going to tell you how you are taking your investment decisions. So it's not just logic, it is also emotion. And where there are emotions, you make mistakes.
Yes, absolutely. Thank you so much, ma'am, for explaining it in such a beautiful manner. Okay, so let's just break that down. What's actually, happening inside our brains when we trade? Like why sometimes we are so stressful and sometimes, it feels so thrilling. So I would like you to, emphasize on this thing.
It's such a beautiful question.
Thank you.
I think we can go on and on answering this question, but considering the paucity of time, I would like to keep it very brief.
Okay.
What happens in our brain? Like some part anatomically, I have told you, there is prefrontal cortex for complex cognitive functions. There is limbic brain for emotional functions. In the limbic brain, there are two systems that I would want to talk about, very interesting ones. One is the amygdala. It's a very small organ in your brain, the shape and size of an almond. But what it does, it is responsible for any kind of fear, anxiety, panic you feel in any situation of your life. So when you activate that, or in people in whom amygdala is activated a lot, what happens? They're going to feel very stressful, anxious in situations.
Yes.
And in people in whom amygdala activation is limited, right? We see symptoms such as hyperorality. They're going to speak a lot. Hypersexuality. They're going to indulge in a lot of sexual behavior. Disinhibited behavior. So they do not have a lot of regard for the societal norms because bare minimum fear is also gone. That was coming from the amygdala activation. The same thing is with the investment also. Investors who are genetically intertwined in a way that their amygdala is going to be activated more, they're going to take defensive decisions even if the markets are very good. Or vice versa. And other than that, in the same limbic brain, we do have another system, another organ, which is called the hippocampus. Hypothalamus. Now, hypothalamus is responsible for all the hormones entering your bloodstream. Right? So, say for example, you're very stressed. So, probably cortisol is it is into your bloodstream, which is making you feel very stressed. Or if you're feeling very aggressive, confident, maybe testosterone is more in your body, which is making you feel like that. So even there was an experiment, a very celebrated researcher with the name of John Coates. In 2010, he conducted an experiment, and one of my favorite research papers and a paper that I would recommend all the viewers also to read, it's called From Molecules to Markets. So there, they talk about two hormones basically, the cortisol, which is the stress hormone, and the testosterone, which is the hormone that provides you confidence and aggression. How do these two hormones impact your investment decisions, right? Other than that, they also looked at the heart rate. So, if the heart is beating very fast, maybe because of the cortisol has been released a lot in the body is stressed. So you might take adverse decision or make a very defensive portfolio, even if the markets are very good. So can we say that the decisions we make is only dependent on the kind of market or the institutional features of the market or how the markets are performing outside? That's not true. Like you said, it's a deeply human process. It's complete physiology at play.
Well, that makes so much sense, ma'am. So we can say, like, when my portfolio is up, I feel like a genius, and when it's down, I feel like the world is ending.
Yes.
So we need to blame the chemicals.
You could say so, although it's not just physiology, but a major part. But if we talk about the chemicals, there's a very interesting, because you mentioned chemicals, so there's something very interesting that we can talk about.
Yes.
There's something called as the mesolimbic reward system in your brain. So we all might have heard about dopamine.
Dopamine,
right?
yes.
So dopamine is a neurotransmitter that is going to make you feel very happy, energetic,
Yes.
euphoric, beautiful feeling, right? So what really happens? So when you're trading and you're earning profits, so there's a specific area in the brain
Okay.
that's called the ventral tegmental area, VTA.
Okay.
And it is rich in dopamine. So whenever you're eating your favorite food, or say you are consuming, unfortunately you're consuming drugs, or you are trading and earning profits, so the dopamine in VTA is going to be released. Secreted. That is going to tell your body that, oh, this is a good feeling and I want to do it again. Now the dopamine is going to be released from there, and it is next going to travel to amygdala,
Okay.
where the fear response is going to go down, and it is amygdala that is going to make you feel happy. Okay, something happy is happening. From there, the dopamine is going to travel to another place called nucleus accumbens.
Okay.
Nucleus accumbens is again responsible to stimulate that reward feeling, and it is responsible for motor functions. Like if you ate something and dopamine was released, so you will continue to eat that, or you will continue to invest there. So motor functions, who is doing that? That's basically because of nucleus accumbens. After that, the dopamine is going to travel to the prefrontal cortex here. That is going to pay attention to how that work needs to be done, because it involves thinking. And finally, that dopamine is going to travel to a place called hippocampus, which is going to create memories for you.
Okay.
And that's how your brain is going to learn that, when I did this, I felt really nice. So it's complete circuit, that when that complete circuit gets completed,
Yes.
you're going to feel fulfilled and you want to do that thing over and over again.
like
So
a
that's
cycle.
why it feels very thrilling.
Okay.
So chemicals, blame, yes, to some extent we
Yes.
can.
Okay. Well, I didn't know that, dopamine had such a big role to play.
Indeed.
So now, Dr. Shivangi, I would love to know that why do stock prices change during big events? Like, talking about the Yes Bank crisis in particular that happened in 2020. The bank was suffering with bad loans, and RBI had set a 50,000 withdrawal limit per account, and panic set in. Investors, fearing a collapse, they rushed to sell their shares. And we know this thing, when more people are selling than buying, the stock prices crashed.
Yes.
So were they acting rationally, like were they making a rational decision, or were they reacting emotionally? And also, I would love to know that what's happening inside our brains during such moments, in such moment.
All right. So, with the Yes Bank crisis, before I actually give that answer, I would like to give a brief understanding of, we need to comprehend the situation, what happened back in 2020 with Yes Bank, for the viewers as well. So, for Yes Bank, so it started in 2004 with Rana Kapoor and Ashok Kapoor as its founders.
Yes.
And from 2004 to 2018, things were pretty good, blingy, everything was great. And it was in 2019 and 20 that people feared that something is going incredibly wrong. And also what happens? So whenever you're making any investment decisions, there are basically two kinds of analysis that you do before you actually decide that this is the stock, this is the potential investment opportunity where I want to put my money. You perform a fundamental analysis and you perform a technical analysis. In fundamental analysis, say for example, I want to invest in a bank. What am I going to see, or what should I see? I should see probably the capital adequacy ratio. I should see the loan to deposit ratio.
Yes.
I should see what are the non-performing assets. Non-performing asset is when an asset or a loan becomes overdue for more than 90 days. So as for Yes Bank, they were very aggressive in their lending. And who were the people that they were lending to? The companies. Companies like Reliance Adag, Anil Dhirubhai Ambani Group, Cox and Kings, Jet Airways, So all these companies, DHFL,
Okay.
they were lending to, and these were very fragile borrowers at the time, and they were lending at a very high interest rate. So that's basically the depositor's money, no, that you are lending to other people.
Yes.
And what was happening was till 2018, the stock prices were actually very high. So the problem was, what I understand is that a lot of people were performing technical analysis in which you see the trend. So in finance, we say that the trend is your friend. So if the stock prices are continuously increasing, say since the last 5 years, so the 6th year also they will increase.
Yes,
That's what we at least make out of it. But that's not true, because the stock markets are extremely volatile. They are going to change.
Yes,
The
they are
6th
going to
year
change.
might change. So that's exactly what happened. So if they would have done the fundamental analysis properly, they would have come to know the NPAs are increasing, because as far as I remember the statistics, in 2015 their gross NPAs were approximately around 0.41%.
Okay.
And in 5 years, in 2020, they were at 17% approximately.
That's huge.
So that's
Yes.
huge. So as investors, what did they do? When there was mass sell-off, they just started selling incessantly. So what really happens in our brains, like your question? So when you are imitating someone or
Yes.
something, there are mirror neurons in your system, in your head,
Okay.
that are going to get activated, that are going to make you behave in a herd mentality kind of way. So if someone is buying, I will also buy. If the market is selling, I will also sell. So that kind of behavior. So because there was mass selling, so the stock prices fell down, the bond prices fell down. So bond prices fell, the bond yields grew, which is not a very good situation. The entire restructuring was done. SBI purchased some 50% of the stake.
yes.
All these things happened. And in all this, the investor sentiment got hurt.
Yes.
So not everybody, I think, was behaving rationally. Also, I remember a management thinker saying that stock markets are just a reflection of the human psyche. So not all the time stock markets are going to be rational.
Yes,
They're ultimately made
Yes.
of investors
Yes.
only. So I think here the investors could have performed better fundamental analysis, and some kind of bubble gets created in the market. We should be
Yes.
wary of that.
That makes so much sense. Also, when Zomato and Paytm, they launched their IPOs, people started buying them without much research.
Yes.
Maybe because they were following the trend, or maybe because of the hype.
Yeah.
But when prices dropped, people had to, sell them at huge losses.
Yes.
So, Dr. Shivangi, why do people get, carried away and jump into such trades without much thinking?
So like you mentioned, Zomato and Paytm. So both these stocks were highly hyped.
Yes.
Hyped means what? They were very overvalued. And these were
Overvalued.
IPOs. And people were not realizing that, say for example, Zomato. Zomato at the time of IPO, it was a loss-making company.
Okay.
So, and rightfully so, when a company is starting, it will not directly earn profits now.
Yes,
It's
yes.
going to earn losses, then it is going to break even, and then it is
Then
going to earn
profits.
profits. So, obviously the expenses were exceeding the revenues. Plus for Paytm, the business model was not that great. They did not have a very specific roadmap as to how are they going to reach profitability. Right? So the hype was a lot. It was highly overvalued. And when people actually understood that these stocks are overvalued, they just sold it.
Okay.
Right? Now there was mass selling.
Yes, mass
Now we've talked about what happens when dopamine is spiking up.
spiking up.
Right? You feel euphoric. But what really happens when dopamine goes down? When you're earning or incurring losses, the dopamine is going down. So what is happening there? So actually, when your dopamine goes down, you start feeling frustrated,
Yes.
anxious. Amygdala is going to be activated in the sense that there's going to be extremely fear. You're going to feel panicky. You're going to feel anxious. You might have panic attacks.
Okay.
The cortisol levels are going to rise. The cortisol is the stress hormone that's going to rise. That is going to fiddle with your sleep.
Okay.
It is going to fiddle with your appetite. It is going to fiddle with your weight management.
Oh my God.
And also, so, if I pinch you, you will feel certain kind of physical
Yes,
pain.
yes, yes.
Why you're feeling that physical pain is because in your brain, anterior cingulate cortex and anterior insula. These are two organs that are going to be activated.
Okay.
These two organs are going to be activated when you earn losses or when you are fearful that a loss might occur. Because there is no separate investment center or financial center in the brain, right? So whatever organs are being activated when you are in an injury or in an accident, the same ones are going to be activated when you are into a loss-making situation.
Yes.
So when internally all these things are happening, how do you stay stable? So there was mass selling because of herd mentality and everything. And the bubble, when it just burst, everybody realized, oh my God, it was completely overhyped and overvalued. So whether it is an IPO or whether it is normal stocks or anything, we must perform the fundamental and technical analysis properly, and we must try to keep our emotions into control. Although that is a function of a lot of factors like your genetics, like your DNA, your experiences, your socio-cultural background. In fact, my PhD research is all about that.
Yes.
So you cannot always control it, but we can try to minimize the losses, right? That's what we can do.
That, totally explains that why do people make impulsive decisions. It's like they are not into analyzing the things, but they are going with the crowd.
Yes.
And only to regret that later. It's like a FOMO, but in the stock market. So now, let's settle this age-old debate. Is stock trading another form of gambling?
No.
Okay.
No. There are, although a lot of people feel that's very similar, it is not. See, in stock trading, when you are trading the stocks, this is for you and for all the viewers, when you're trading this, because when we are in the class, we often get this question a lot from the students also. You complete the entire curriculum and at the end they're going to say, but ma'am, stock trading then is very similar to gambling. What is the difference? There is a lot of difference. Number one, risk control, risk management. See, in gambling, you understand that the casino odds are always going to be against you.
Yes.
So there is no risk management. Whereas in stock trading, you can manage the risk. You have things like stop losses.
Yes.
You have regulatory bodies like Security Exchange Board of India, which are just working on the disposal or to, not just disposal, or to make the retail investors feel safer in the entire institutional setup of the market. So that is number one. Number two, and the most importantly, what really happens biologically, if you see a trader's mind, they are going to be more driven by the prefrontal cortex, the complex cognitive brain. If you see a gambler's brain, they're going to use more of emotional impulses, the limbic brain.
Okay.
So that is why emotional brain, when you're using the dopamine, adrenaline, all these things are impacting you. Now that is an addiction.
Addiction.
Whereas in a trader's brain, especially for professionals, it's very complex cognitive thinking. You have to perform fundamental analysis, technical analysis. So very different, and mostly professionals would go for a long-term trade and not for very short-term gains. In the beginning, when they're just starting, they might. But it's always a long-term thing, no? So that is why stock market, stock trading can never equal to gambling, because physiologically, the way you make your decisions, or externally, the kind of risk management, the kind of protection that you get as a trader, you can never get as a gambler. So there's a lot of difference.
That does hold some substance. So, Dr. Shivangi, I would now like to know that how can, someone break out of this emotional cycle of this excitement and stress of constant, checking their stock prices? And how can an investor take a rational decision?
So, well, thank you for the question. I think at the end, it boils down to what we can perform better.
Yes.
So, whenever, students take up this course of neurofinance, or whenever we're writing some research, we always look out for the answers. ठीक है, आपने trade किया, you trade, and there is certain kind of physiological things that are going on in the back end, and there is hormonal impacts, that's fine, but what can we do better? So there's a beautiful concept called neuroplasticity.
Okay.
So neuroplasticity is a remarkable concept which states that brain is one organ that can learn, unlearn, and relearn throughout the lifetime. So, you can reorganize your brain in a different way if you want to unlearn something or learn a new thing. So, neuroplasticity talks about two concepts, functional neuroplasticity and structural neuroplasticity. Okay. I'm going to give you an example. If today, say, someone's speech is impaired, brain automatically is going to try to compensate it by activating some other part in a different way. Okay. So the speech is impaired, but some compensation brain will try to do itself. That is functional neuroplasticity. Okay. And structural neuroplasticity is, you would be amazed to know, actually, like we have cells in the body. Yes. The cell makes an atom, atom makes an organ, organ makes an organ system, and organ system makes a human body, basic biology. Yes. The same thing is with the brain also. Okay. So the brain cells are called neurons, and you build neurons throughout your life. How do you build neurons? You read a new book, you build neurons. You learn a new skill, you build neurons. Say you learn how to play some musical instrument, you are making neurons. You learn a new sport, you make neurons. You learn trading, you make neurons. So this is structural, that the structure is changing, right? So you're making neurons throughout your life. Okay. The same thing applies here. So as a trader, we must try to achieve that. Okay. Learn new things and unlearn the old patterns. So neuroplasticity basically tells us that through experiential learning, through reading, through taking new experiences or other things, through mindfulness and meditation, you can change the way your brain thinks. Okay. And brain is encompassing your prefrontal cortex, your limbic brain, your amygdala, hippocampus, para-hippocampal gyri, and so many things. Okay. So that means everything is going to change. Your emotional impulses are going to be balanced. Your cognitive thinking is going to get better. Your hormones are going to get better. You're going to face less imbalances in your body, and overall, even your overall being is going to improve. So that gives us a remarkable insight that we can actually rewire our brain and change our entire circumstances, not just investment choices.
So just like, we can rewire our brains to break bad habits, we can also train ourselves to be better investors. Yes. I guess that's really empowering. So we can say that trading is not just about logic. It's about controlling emotions. If you feel like trading is taking over your life, it's time to rethink your habits. Dr. Shivangi, any last advice for our listeners?
Well, the last advice would also, be around what we've just talked about. We've talked about the physiology, the biology. One additional thing and the last thing that I would like to talk about is the emotions, right? When we talk about emotions, you have different theories around emotions. Okay. Like in the 1800s, Aristotle and Plato, they said that, emotions are just coming because of some outside stimuli. Or even the word stimuli was not used. It was used it was said that it's a very subjective experience. Okay. It's going to change from people to people. That some ways is right, but then other theories of emotions came in, right? And those gave us a lot of insights on how emotions impact our decision making. And now particularly we can say about the financial decisions or the investment decisions. Now emotions, you can have two types, intrinsic, which are called your endogenous emotions, or extrinsic, which are called your exogenous emotions. So when you experience something because of your inside internal factor, say I had a bad experience investing in a certain stock sometime. Now I would want to avoid that stock because there's a traumatic experience attached to it. That is your endogenous emotions at play. They are not letting you make a very suitable portfolio. Okay. When you talk about exogenous emotions, they are the stimuli is coming from outside, external. Say, for example, the institutional features of the market, the government policies, the taxation policies, the macroeconomic policies, whatever happened when Trump came into power. Yes. And the stock markets really changed. It did. The market was in a slump. So those are now your exogenous emotions. There's something because of external factors. Okay. But whether it is endogenous, whether it is exogenous, it must be controlled. How can we control it? Like I said, building new skill set, learning how trading is done. You should never, fire a gun in the dark. It is not going to yield any result.
Yes.
So you have to be very specific in even trading yourself.
Mm-hmm.
And thereafter, being very mindful, performing meditation. Meditation is a very underrated concept in Gen Z, unfortunately.
Yes, it is.
But it is, like we were talking about neuroplasticity, it is completely going to rewire your brain. And if your brain is not performing well, you're actually brain dead, you can perform nothing, you're good for nothing.
Yes.
So it's very important to keep the brain sane. So the last words would be, please be mindful, do meditation, learn new skill set, and be very aware of what is happening in the financial market. Fundamental and technical analysis both are important.
Yes. Wise words, Dr. Shivangi. Thank you for joining us today. It was a pleasure having you with us today.
Thank you for calling me. It was such a pleasure talking to you.
Thank you.